Hello guys, welcome to Frequency and FX Trading Channel, and in today's video we are going to be reviewing these trades together, guys. As you can see on the screen, I have $23,000 in profits, and that is from a trade we took from the Volatility 75 index, and that is a take profit target hit already. I'll show you the trades we took today. Boom, we had series of losses, and of course our loss, as you can see up there, is minus $4,000. But with the profit that I'll be closing here today, we are going to cover up those loss, and with more profit. As you can see, I'm already closing the profit at $11,500, and that's a very good thing. Okay, you see right now my profit is now 6k. You see, we were in a loss of $4,000, but we just took our TP and instantly we overpowered our losses, and now are in serious profits. Yes guys, I'm closing the two trades. They are just scalp trades that I took so that I could illustrate something to a subscriber who had questions, and here we are again and doing another signal. Okay, you see, I have a step sell order, sell stop order with step index. Step index, however, has gone so high. Okay, we were trading step index in 5 minutes time frame some while ago, but we have gone away from the. So as you see here on the chart screen, the market keeps moving, and we were trading this pair during the afternoon time, and market was choppy. The market won a lot of my profits, a lot of my capital. It was during the afternoon time where we were executing trades that were not actually playing out well. But here we are in the 5 minutes time frame again, and the market is telling us that since when we left this chart, a lot of things had happened, and to my excellent surprise, I see many of my strategies coming through. Basically I will go to the previous trade I had this afternoon, and you can see the time the market tell me I took this trade. It's telling me that I took the trade on the 11th by 10:21 p.m. whereas this was just the afternoon time. And you can see here on my chart screen, this point is the afternoon period where we took this trade at, and there you see it. So we are seeing more and more trades that were taken but were losses. So what is the question right now? What happened? What suddenly happened to the market? I see I have big wins now, so I'm trying to know what happened for the market to just the trading industry renders so many opportunities, but with risk loss or risk of loss attached to it. There is a probability that you start trading and you lose all your money instantly. You lose everything in your account with no change for you to take back home. It is a game of chance. You cannot risk your hard-earned capital here, because if you do, you might eventually get stopped out. The financial market is a volatile place where a lot of monetary transactions being taken place at. So the financial The financial industry offers so many liquidities to trades that have some wide range spread inside of it. The spread, as to say, as its take in your profit or loss capacity. There are times you put your loss here, but your loss will get triggered here. There are times you put your loss here and your loss will get triggered here. That is because of this two space you see. We call this two line the spread of the market, the difference of where you bought from and how much commission the broker is charging you for the trade you took. So the broker charges commission and the commission goes to the pocket of the broker. So why do we trade synthetic indices? That is another question a lot of people would have in their mind. Yes, it is a good question. Synthetic indices are volatility pairs with no market, no economical attachment to it. They just move based on a random momentum, respecting and replaying the things that the market did in the past. So the volatility indices, that is the synthetic pair, is a reciprocate of the main one. So this is to make you understand that as we are trading this market, we are also doing our back testing, and we are working so hard that we don't risk people's hard-earned fund in a place we do not know whether we are going to win or we are not going to win. So we have all these charts on our screen right now, and we're trying to create a solution in life with these things. This is now where the market is doing something I don't like at all, and that is the ranging. So I'm going to pull up an historical chart. I'm going to pull up an historical chart movement here. All of my historical trades can be seen and monitored here. So you can see all the losses I had in this market. This was the win that I first had, guys. And after opening, my little take profit was here, and I will take you to the time frame we did the analysis on. So if you see this, then you are looking at it properly. So I bought here and I lost here, and there's something the market did that didn't go well. But we people do these things because, so for a fact we know that this market always does ranging. Let me talk about this range. You see, we have had a lot of trades taken, and now we need to do more with our accuracy by doing analysis. So the market is breaking ranges and structure. So yeah. So I want to do the structure very well, so everybody see that this market moving inside of a box, and the box is known as the market structure. And you see this analysis 247 every day If you do market analysis well enough, you'll understand the principle behind this box and the range. And there are times market ranges. For instance, during the afternoon time where I was trading market was busy getting range. None of this ranging momentum kept on playing over and over again. So we see this happening over time in the market, but how do we win it? We are just going to take out a spacious time to do some analysis that will actually work. So the analysis behind my trade is a lot of confluence, starting from the fact that this looks like a market structure formation already that just went above and then started going below. A very straight entry that has resulted to victory. So this is an entry point, and I'm so glad that I took the trade like I did on the screen right now. And another thing I'll be doing here, guys, is doing more analysis, so making more accurate trades signals. We are doing some back testing before we make another analysis for another trade. So currently I don't have any movement for volatility 75 index. I will simply go to another time frame to look for a trade entry that I will be using for markets tonight. So from volatility 75, the next pair in my mind to trade with is the high frequency vol 50, and I want to do a challenge right now. Okay, I want to trade for the next 2 minutes, and I'm sorry, for the next 5 to 10 minutes, and win $1,000 plus to this account. Just so you understand how easy it is to make in 1,000 when you have a lot of capital. It just requires risk, a lot of lot size applied to trade. Trust me, that is the biggest way to trade this market. You need to have a lot of lot size, and you need to be able to execute your trade without fear whatsoever. But before executing trade, you will need to do analysis like I'm about to do on the screen right now. So the first step is to draw a trend line. This is a simpler strategy compared to the Elliott wave. There are people who cannot actually read the Elliott wave strategy properly, so they tend to want to use simpler strategy, and that is actually available. As you can see here on my chart screen, I'm trying to make a trade movement, and the first two things I've done are the trend lines on my chart, and you can see me drawing another one right now. So I just drew the third trend line, okay, and the fourth one I'm going to draw like this. So the first trend line is sloped downwards, and I can confluence that the market is going to go up. However, it has. So what I'll be doing next is to draw in a box underneath that line, okay, that I have just drawn. And because of that box, the market is going to act reasonably with us, and we are going to be able to get in that specific trading momentum that we need. So the next step is that we are going to go to the lesser time frame. That's the 5 minutes time frame, and inside of the 5 minutes time frame, we are going to do well to mark out another support and resistance. This market looks like a trade that has gone very, very high from the very area we drew a trend line at. The market is refusing to give us a zoom out, so I'll go to an higher time frame and do that, get that done. So now inside of the 5 minutes time frame again, I want to trade this pair. But guys, if I am trading pair, I want to trade pair that reaches its destination fast, okay? So I will go full margin and see how that I can make $1,000. If you want to make $1,000 when you trade pairs like this, you need to be open-minded. Alright, you need to say to yourself, this is the specific amount of money I want to make, and using the highest lot size available for that pair goes a long way. So this is looking like a double top. This is looking like a double top strategy. The strategy where markets hits the first top and does it again, and when it does for the second time, it goes below. So you can see I was in $500 profit. Some people will ask me, Emmanuel, why are you able to making just $1,000 when you have an account of $3.75 million? Why aren't you aiming for $20,000 as profit? Why are you not aiming for 30,000? Why are you not aiming for 50,000? Why is it just $1,000? Well, $1,000 in the real world is a lot of money, and in a future, in a realistic business, to make a lot of money, you need to invest a lot in your capital. You need to have a lot of capital. You need to have a lot of capital before you're making a lot of good trades.